On June 12, 2026, SpaceX pulled off the biggest IPO in the history of financial markets. 4 days later, it was worth $2.8 trillion, bigger than Amazon. 3 weeks later, it had given almost all of that back. This is not a video about whether you should buy a rocket stock. It's about what the numbers actually say. Because inside this rise and fall is the cleanest lesson you will ever get in how Wall Street prices a dream. And the math has a date circled in August. Start with the record it broke. For 7 years, the biggest IPO ever was Saudi Aramco, an entire national oil company, at $29.4 billion. Alibaba raised $25 billion back in 2014. SpaceX priced its shares at $135 and raised $75 billion in a single night. Demand ran so hot that the banks exercised their option to sell extra shares, pushing the total to roughly $86 billion. That is not breaking the record. That is nearly tripling it. And here's the detail most people missed. The company's own filing aimed for a valuation of $1.75 trillion. The market was about to blow straight past it. The stock opened at $150, 11% above what IPO buyers paid. It closed the first day just under $161, up 19%, valuing SpaceX at roughly $2.1 trillion. That's already worth more than Tesla. On Monday, it jumped another 20%. And by June 16th, 4 days into life as a public company, the shares touched $225.64. At that day's close, SpaceX was worth about $2.8 trillion. Bigger than Amazon, bigger than Meta. One of the 5 most valuable companies on Earth. And here's the part that explains everything that came next. The IPO sold only about 4% of the company. Elon Musk kept roughly 42% of the equity, and through special shares carrying 10 votes each, 82% of the voting power. His personal stake touched $1 trillion on paper. So new shareholders bought a ticket on the ride. Musk still owns the rocket. And what were they riding exactly? That's where the filing gets interesting. The IPO paperwork gave us something we'd never had: audited SpaceX numbers. Last year, the company brought in $18.7 billion of revenue from 3 very different businesses. First, the rockets. 165 orbital launches last year. That's 51% of every launch on planet Earth, and 85% of every satellite that went up. And that division still lost $657 million because SpaceX is pouring around $3 billion a year into developing Starship. Second, the real engine. Starlink. Over 12 million subscribers paying for internet from space, $11.4 billion in revenue, and it is the only division that makes money, $4.4 billion of income. Starlink is now 61% of everything SpaceX earns. The rocket company is, financially speaking, an internet provider. Third, the surprise inside the filing. xAI, Musk's AI company, folded into SpaceX, $3.2 billion of revenue and a $6.35 billion loss. Add all of it up, and the whole company lost $4.9 billion last year. So the bull case is real. A near monopoly on space plus a satellite internet machine growing like a software company. The bear case was never the business, it was the price. At its peak, SpaceX traded at about 111 times last year's revenue. Not 111 times profit. There is no profit yet. 111 times sales. Run that math backwards. For SpaceX to trade at 10 times sales, which is already a premium price for a fast-growing tech giant, it would need over $200 billion of revenue. That is more than 10 SpaceXs, stacked on top of each other today. Even giving the company credit for this year's growth, the stock was still trading at roughly 56 times projected sales. A price like that doesn't leave room for good execution. It assumes perfect execution for years, with no accidents and no competition. From a company, remember, whose operating loss last year was $2.6 billion. And when a price assumes perfection, any friction at all becomes news. The friction arrived in week 2. June 23rd, 11 days after the debut, a tech sell-off wipes $600 billion off the market in a day, and SpaceX falls back through its debut price. July 1st, it drops another 8%, to $157, $2.54. That is 30% below the peak, and most of the IPO pop gone. Now, some fairness. As we record this in early July, SpaceX is still worth about $2.1 trillion, roughly 20% above its IPO price. This is not a collapse, it's gravity. Here's the thing, nothing about the rockets changed that week. What changed is that investors started reading the calendar. In a normal IPO, insiders are locked up for 180 days. SpaceX built a ladder instead. 20% of insider shares unlock right after the August earnings report. Another 10% unlock if the stock trades 30% above the IPO price. Then 7% tranches around August 21st and again September 10th. Add it up, and by early September, insiders holding as much as 44% of the company could be free to sell. The number of shares available to trade could grow roughly 900%. When supply can expand like that, buyers start doing the math early. Hanging over all of this is one post. June 14th on X, Elon Musk wrote, and this is his exact wording, "I think SpaceX might be able to reach approximately $1 trillion revenue in 2030. Remember, last year was $18.7 billion. $1 trillion by 2030 means multiplying revenue 53 times over in 4 years. Roughly doubling every 10 months, without missing once. For scale, NVIDIA, the fastest scaling giant of the AI era, grew about 8 times over its best 4-year run. Musk is describing growth more than 6 times faster than that. What would have to be true? Starlink serving hundreds of millions of customers instead of 12 million. Starship flying commercially, at scale, on schedule. Entire defense and AI businesses maturing at once. Maybe. But notice the word carrying that sentence. Might. $2 trillion of market value was resting on the word might. So ignore the predictions, including his. Here's the scoreboard that actually settles this, starting with the first earnings report in August. Number 1. Starlink's growth rate. It went from 10 million subscribers in February to 12 million by June. If that pace holds, the bull story survives the sell-off. Number 2. The burn. Watch whether the Starship spending, around $3 billion a year, starts translating into revenue, or just keeps translating into losses. Number 3. The unlock. Of that 44% of shares freed by early September, watch how much insiders actually sell. People who know a company best vote with their shares, not their posts. 3 numbers. They'll tell you whether June was the beginning of something or the top of it. The biggest IPO in history, a $2.8 trillion peak, a 30% fall, all inside a single month. None of that tells you whether SpaceX changes the world. It already has. It tells you what the market will pay for a story, and how fast it goes back and checks the receipts. That lesson will outlast this stock, whichever way the August numbers break. We'll be watching when they land. If you want that follow-up, subscribe. We follow the numbers wherever they lead.